right. Hey there. What's going on, everybody? Christopher Franks with Texas West Capital. It is, It's just after 11 a.m. Central Standard Time here on Friday. What is today? Today is the 12th of December, 2025. Hopefully, you guys are doing all right. We've had a heck of a week. A lot of good shorter term directional trades, based on things that have happened with the Fed, especially since Wednesday. So hopefully you've been able to take advantage of it. I know a lot of our students have done really well the last half of this week, especially with all that going on. So we're going to talk about that. We're going to talk about specifically what Jerome Powell said there, what it means, as far as markets go. We're coming in halfway into December here. Santa Claus rally or not, we'll find out. Bitcoin, we've got some key levels we need to get through. Until then, you should still be concerned about what's going on. Potentially heading lower. We'll find out. We'll take a look at the gold and silver charts, really kind of taking off still, and some other things. So hopefully you guys are ready for that. How are y'all doing today? Hopefully you're doing well. No spa music today, Bernardo, just because I knew you'd ask about it. Man, oh man, though. But what a week, right? So Wednesday, the Fed came out and, again, we were expecting a quarter point rate cut. That's what we got. But also we had Jerome Powell say, hey, listen, we're going to start buying treasuries. And so what does that mean? Well, basically monetary easing on steroids, right? So when the Fed is cutting rates and buying treasuries, now there's one caveat here. The one caveat is that right now, if you look at the dot plot chart, they've only got really one more cut scheduled for 2026. Don't just go with, they said they're cutting rates and, they cut rates and they said they're going to start buying treasuries, because there might only be one more cut here coming this year. Okay. And that's going to put a damper on that overall effect. But if we can get up, if we can do a few cuts next year, it starts looking much more interesting for liquidity. Right. So again, the Fed cut rates. So we're down there again. Jerome Powell also said that again, we're going to start buying some treasuries now. So what does that mean? Well, for stocks, it's bullish, right? Liquidity rises, yields fall, money's forced into risk, right? That's the whole thing. Bonds, yields get suppressed. Kind of works the opposite way, right? The yields get suppressed by the Fed itself. Curve control it becomes a thing, right? The dollar starts looking more bearish. Y'all know I'm still bearish on the dollar. I've been ever since we hit my target at 114 to 115. And so, I expect the dollar to continue to fall. So, more supply dollars, less yield advantage kind of idea, right? Gold, with that kind of backdrop, gold should be bullish, which means silver should continue to be bullish as well. So you've got lower real rates, and then you've got money creation. Now, Bitcoin and crypto, this may be what you guys are interested in. Structurally, it's bullish, right? This is the exact environment it was designed for. You get rate cuts and you get treasury buybacks, right? So what does it really mean? Well, it really means the treasury market likely can't clear at higher yields without breaking something, right? So the Fed is backstopping that government debt. That's really kind of what this signals more than anything else. So that means, it's good for, asset prices here in the short term, in the near term. But as far as long-term value of money, obviously, it's a negative, right? So yeah, I would say we're really looking at some good possibility as far as liquidity goes in 2026. But we want to see We don't want to see the Fed getting, out with just one rate cut next year. We want to see them have a few of them. Um, that's going to, I guess you could say, juice it up even more. Otherwise, it's okay. But that's that one thing I'm really kind of watching there. So, now overall, you guys, if you've been in the crypto area, you've heard a lot of talk about, real world assets and tokenization of everything. This is an extension of something called hyper financialization. Now, why is that a big deal? Well, for a long time, I've been trying to explain that the market is not the economy, right? Every time somebody says something about, oh, the market can't do this because the economy is this, the market continues to go up, right? You have to understand that if you're going to be in the market. Now, here's the thing. Up until probably about, I don't know, maybe a decade ago, maybe 5 years ago, the economy led the market more or less, right? We've really kind of the last decade, 2 decades, we've really kind of been moving out of that. But today, even more so now, it's the market is leading the economy. And that's because of the hyper financialization. Now, what does that mean? Well, that just means there's a whole bunch of dollars being printed. There's a whole bunch of liquidity and everything's being, tokenized. That means everything is tradable, right? And what does this mean for us? Well, it means that if there's more money out there and things are becoming, more things are becoming tradable, that money's going to find somewhere to go, right? That's the idea. You're going to, so what have we seen? We've seen things like Kalshi and what's the other prediction market out there right now? The big one, Polymarket, right? So we're seeing these things really explode, and they're doing, they're doing. We saw within the last few years, prior to the last few years, we saw things like DraftKings came out and did really well, right? And other kind of sports betting sites, and now we've got Polymarket and Kalshi out there really bringing in a ridiculous amount of money. And again, this is a product of this hyper financialization. It's a product of this idea that the government is going to continue to unloading money into the economy, right? That's what you do. Anytime something's starting to happen, and this is a structural change, right? This happened back during COVID. The biggest thing that you usually don't want to say in markets is this time it's different, right? But, functionally, foundationally, the markets are changed over what they were prior to COVID because of the way in which government has changed its approach and the way in which the Fed has changed its approach, right? So now people are expecting quantitative easing of some sort. They're expecting liquidity to flow in. Every time anything happens, they're expecting it, right? And the government's doing that, right? The Fed is doing that. The Fed's jumping up there and they're like, okay, well, let's turn on the spigot right now. Up until recently, the last couple of years, it's been QT, right? Quantitative easing or quantitative tightening because of how much they tossed out there during COVID. But here we are again, and now we're at this point where the Fed is going, okay, well, we're going to backstop government debt here now, and we're going to, buy up treasuries. So the Fed's coming out here again and starting to put more of that money in there, right? So now you've got a lot of extra money potentially coming in. You've got rate cuts coming in. Again, this should set up a pretty good 2026. Now, I know that goes against, everybody's kind of, 4-year cycle for Bitcoin and this and that and whatnot. But I think, again, if you're looking at that 4-year cycle thing, instead of actually paying attention to what the market is doing now, I think you miss. I think you miss out on what's potentially going to happen. Essentially Bitcoin, we'll look at the chart here in a minute, but Bitcoin's been sideways, right? It's been sideways for about a year now, ultimately, right? And we could still see it drop a little bit lower there, and not structurally change anything, right? We can still look at this as just one sideways correction since January of last year. And until it does something more significantly than what it's done, I mean, that's currently how I'm looking at it. All right. Now, why? No, I'm out here. I've made ridiculous number of calls over the last God, for a while now. Marking lots of bottoms and whatnot. But I'm not out here to say, okay, yeah, well, trying to get credit for saying there's a bottom here, there's a top there, whatever. I'm just trying to trade, right? I'm trying to make money, and that's what you should be doing. The problem is a lot of your KOLs and whatnot on social media, they're not really out there to make money, not for the market anyway. They're out there to make money from you. They say incredible things and they hype up everything in hopes that you're going to read their posts and going to comment on them because that's where they're going to make their money. You get it's the attention economy, right? Me, a lot of my calls end up being correct, but it's not because I'm trying to do that, to get some kind of clout online or something. It's because I'm trying to make money. I'm trying to be realistic about it, right? We've been doing this 30 years, guys. 30 years. And I'm going to tell you, after 30 years, things are different today than they were when I first got in 1995. The market, the way in which the Fed is working now, very, very much different. And that's especially since COVID. So I guess what I want to say is I would warn you against just automatically blindly assuming that something's going to continue the way it's done because that's the way it's been. Okay. If the way in which the Fed is operating now was different or wasn't different, if it was continuing the way it was prior to COVID, I'd be like, yeah, whatever, same old thing, same old thing. But the fact that it's not means all of a sudden there's a change happening, right? And we have a lot of change happening right now. We have AI, right? We've got AI. We've got Bitcoin and crypto and whatnot, right? We've got the hyper financialization going on here, right? We've got CRISPR technology, which is gene editing. I mean, we've got so much stuff happening right now. Normally, historically, you might have one or maybe two things happening at the same time, but we've got, 5, 10 different things happening, like major things happening right now, right at once. And so this, I think, is leaning into the next epoch of what we're doing here historically. And these things usually lead to strong moves. Okay. So, when we're kind of looking at all that and looking at markets, I take all that into account, in what I'm watching here. Now, being in the markets doesn't mean you just blindly long, you blindly short or whatever. You've got to have your understanding where your levels are and what you're looking at for what's going on. But, when you take a step back and you look at what's going on technologically right now, okay, is just absolutely crazy. Right. And so I think what's going to happen is you're living through it right now and these changes are happening, but you don't really notice a lot of it or really notice the real impact of it. But like 5 years from now, you'll be like, what the heck? AI is doing what it's doing right now. Within a couple of years, it's going to be so common. You think you might think, oh, maybe it's common right now. It's really not. But 2 years from now, 3 years from now, hell, 5 years from now, it's going to be in absolutely everything. And everybody's going to be using it for everything they're doing. But you're going to just wake up one day and be like, what the hell happened? Even though you lived through it, right? And I see the same thing happen with a lot of stuff that we're doing right now. We've got Bezos and Musk both talking about data centers in space. Well, okay. Why is that important? Well, one is solar arrays. You can create solar arrays a lot easier to, your solar power coming from the sun is amplified. I think something like 30% or 40% greater up there in space. And so easy just to, put your solar arrays out there and then get the energy to the data centers. But here's the big thing about the data centers being in space. One is, space is a lot colder. So cooling isn't as big an issue as it is down here, right? But I think the bigger thing about this is, guess what? If your data centers are in space, your government can't tell you what you can or can't do on that data center. That data center is outside your country's, sphere of influence, right? It's outside their borders. It's like the UK telling Americans, you know what? You can't say this or that online, otherwise we're going to arrest you. Americans are like, yeah, whatever. Go, go away, redcoats, right? But it's the same idea in space, and this is where it really gets crazy, because when you start thinking about that, right, and all of a sudden information becomes much more free flowing through all that. So there's a lot going on here with everything, with all the changes. You can even look at things like robo taxis. Elon's Tesla's Optimus robot. And all this is leading to some much bigger move in the future. But all these pieces just generally right now are just really crazy, happening so quickly. And I'm just telling you guys, in 5 years, you're going to wake up and it's going to be like, what the heck happened? And everything's going to be different in terms of the economy and in terms of the markets than what you've been used to if you've been doing it for any length of time. Again, for me, myself, I started in 1995. And what we see with the markets today since COVID and with the Fed is patently different than what it was when I first started, than what it's been almost my entire trading career. So, again, we're always warned about, oh, this time it's different and whatever. But it is different right now. And how that's going to affect markets going forward is what's going to be interesting. So, again, I would suggest that if you're in the markets, which I assume y'all are because you're here, right, that you're not just blindly assuming because something's been the way it's been, that it's going to continue being that way. Because that's what's going to get you caught, right? Let me see here. Joseph, what's up? He says there's technology now to send the solar energy captured in space back to Earth with a high level of efficiency. Yeah, Japan was doing transmitting it via microwave technology, I think. From a small solar thing they've got up there in space, down back here. Yeah, definitely some. But the idea of data centers in space, that's the big thing, right? Because all of a sudden you have freedom of information, whatever you want to say, however you want to say it. And that opens up a whole bunch of interesting possibilities, right? So, let me see here. So that's kind of, my bigger idea of what I'm thinking here. I'm putting something together. I'll release out there for y'all here when I can get to it. But I've got this bigger picture, this bigger idea of how all these things are coming together and what they potentially mean, not just for markets and the economy, but just life in general. How does life progress from this point, right? With all these really significant changes that are happening at once. I would say this, like I said, I believe we're entering into a new epoch here. And I think what's happening now is a stronger, greater convergence of things than has ever been at any other epoch in history. And so that to me is really kind of exciting. So, but anyway, yeah, so that's what we're kind of thinking. Now, other thing, we got Do Kwon got sentenced to 15 years. How do you guys feel about that? Remember, he's the Luna guy. He back in August, I think it was, he confessed, or said that he committed fraud or whatever. Now, that may be altogether in a way to get a lighter sentence, but nonetheless, sentenced to 15 years here, right? Do Kwon sucks. Luna, his size is not size. Yeah. It's really interesting because we have that, and then we have I can't remember his name. I just lost the guy who created the privacy wallet, who's getting sent to prison, which I think is absolutely insane, right? And the idea that in a free country you can be sent to prison for creating privacy. I'm telling you guys right now, privacy is important. As human beings, we can't function at our best level if we're always on. And if you don't have privacy, you're always on, right? This is what people in other countries are starting to recognize with all the government surveillance and everything else that's going on. right? And so here we are in the US, you create a privacy wallet, right? And all of a sudden, there you are now. You're just kind of, they're like, yeah, well, thank you for your contribution. Now go to prison. Crazy times. Crazy times. Let me see. Bamboo said if he's going to spend that jail time in Montenegro, he'll have an easy time since corruption is rampant over there. Criminals with money live a good life over there. It's but it's crazy, right? So you're seeing a big old shift over the last, again, 5 years or so here in crypto. We started the Beards and Bitcoin podcast there just about a year and a half ago. And at that time, we were talking about things that we thought would take maybe a few years to happen. And pretty much everything that we've talked about is happened now, including just recently, PNC Bank partners with Coinbase so that PNC Bank can offer some of their customers direct trading of crypto out of their current accounts. They don't know, no extra wallet creation, no anything like that. I mean, it's absolutely crazy the speed at which things are right now advancing. And so, yeah, so people talk about AI being a bubble, right? So what does it mean to markets? Well, people are talking about AI being a bubble, but in NVIDIA, right? NVIDIA specifically, right? They're talking about it's just a few companies pushing around money, and that's really what it is, right? But I think, it seems to be a lot more than that. And if we look at like NVIDIA's earnings, its PE, all that kind of stuff compared to like Cisco, which was the high flyer at the time of the dot-com bubble, Cisco was magnitudes higher than what NVIDIA is now. So when you're looking at that, it's hard to really kind of say, well, yeah, sure, we're in a bubble. It doesn't really appear to be bubble, or maybe we're in a bubble, but we're nowhere near the top of the bubble, right? But again, this is that thing where we say, you've got to be paying more attention to what's going on there. I think as far as AI and whatnot goes, I think if you're interested in AI plays, I think you're probably better focused maybe to look toward energy, because that's the bottleneck, right? That's the bottleneck with AI is energy now. Now I live in Texas. We have our own grid, if you don't know. ERCOT, ERCOT runs the grid. The problem with this is that Texas has become a pretty big hotspot for data centers, especially in the San Antonio area. So you've got all this coming in here, which is going to draw even more power off our grid. And those of us living here now, we are already seeing increases in energy, right? So I know, like where I'm living, over the last 3 years, 2.5 years, maybe 2 years, energy costs here, electric costs have gone up. Let me see here. 1, 2, 3, 4, quarter, almost 20%, 25%. For me personally, right here where I'm living, if I'm just looking at the energy cost of the home I'm in. And that's significant in a very short amount of time. And with AI continuing to grow and data centers continuing to get built out, you're going to see that energy costs are going to continue to rise with that. Now, again, this idea of being able to create solar arrays and getting energy that way takes a lot of the stress off your energy grids for these data centers, right? If they can do that. Other things that are going on, you've got Chevron in the Permian Basin is setting up, is building out a gas structure out there. And using that, they've already sold all the energy that's coming off it to was it Microsoft or Meta? It was one of those two to power their data centers. So it's going to be a direct energy is going to flow right there from the gas, right there to the data centers. Going to completely stay off the grid with that. So, I think we're going to see more of things like that. So, if you're looking at, well, what kind of energy companies, maybe you want to get interested in, if you're interested in energy play, I'd be looking for stuff like that right now. It is just crazy though, what's going on. Again, I've lived in Texas most of my life, right? I'm from West Texas. We're raised on oil and gas, and it's just kind of crazy seeing the way things everything from horizontal drilling just a couple of decades ago, which took us to the number one oil producer in the world, right? By far. If you look back 15, 20 years, something like that, I think you were like Russia. Well, it was Saudi Arabia, Middle East and Russia, number 1 and 2 in terms of oil production. US was like third. US now is first. And the last time I looked, I believe it's something like the number 2 and 3, the Middle East there and Russia together are less than how much the US pushes out. It's absolutely crazy, right? I mean, so again, these are significant changes that are going on that you're living through and you're not even noticing it, right? You're not even noticing it. And you wake up one day and you're just like, what the heck happened? And so if you're in markets, you've got to pay attention to this because it's going to, there's so many actual structural changes and things going on right now that it's going to make things happen a bit differently than what they've done in the past. So let's go ahead and jump on some charts here, guys. Let me pull up my charts. Let's see here. Share screen, share in here. Oh, by the way, real quick. Yesterday, I dropped 3 promo codes to get 50% off our annual Liquidity cartography group subscription. 2 are gone already. We have one more left. So the code is 50OFF, 50 off. So as long as you can use that, it's still available. If you try and use it and it says, the code doesn't work or whatever, it's because it's used. But we've got one more at that in there. So just wanted to make sure I mentioned that real quick. By the way, I also, if you're in Texas West Capital, you're in their trading academy with us, check out the community announcements area in the Traders Club. And I gave you a quick screenshot of the of a project I've been working on, with what's it called? Journal, psychology, all this stuff in it. It's the Texas West Capital Trader OS. And so check that out. I gave you a couple of screenshots and mentioned there's kind of told what's going to be coming with it. It's going to be absolutely crazy. And so if you're a annual Liquidity cartography subscriber, that's going to be included in your in what you've already paid for your annual. If you're on the monthly or you're just in Fibbo's group or you're in something else, there will be a discounted rate that you can get access to it. But it's going to have live feeds and everything else as well, which is, why we've got to charge a bit on there. But it's absolutely crazy. You're going to, I think it's really going to change it, right? Because again, a lot of what I talk about and work with the Texas West Capital is the psychology, understanding your psychology, but it's still something that a lot of traders have a lot of trouble with. And this is going to help you start understanding what specific psychological issues or challenges that you're facing in your trading based on your trading. And so by understanding what you're dealing with, you're going to be able to work through it better and set yourself up for more wins and less losses on that, right? So anyway, just some thought there. I wanted to mention that real quick. I also have a Bitcoin website that I'm going to be releasing here pretty quick as well. It's going to have everything from, Bitcoin in the markets to understanding Bitcoin treasury companies, to understanding Bitcoin mining, to understanding statecraft and geopolitics when it comes to Bitcoin, to understanding energy when it's related to Bitcoin. It's going to be like everything in there. So I think you guys are really going to like that as well. I'll be excited to share that with you as soon as we get that launched. But let's go ahead and jump over here real quick. So this is dominance, Bitcoin dominance here. And don't worry about the count. You don't have to worry about the count. What I'm looking at here is this descending broadening wedge. And so really what I'm looking for is a breakout above it. Now, right now, it's up there almost around 62 in that. But if we can get a nice breakout above that, That starts having me look up here around 71 and three quarters, 72 at least up here. So, but right now, you can see here, we just got, this is the weekly chart. Look at this. You had this big, remember this run up and rejection there, beginning of November? And then we kind of pulled back and we're just doing this right here. And we're just resistance right here constantly, right? The same place this big breakout was here. It's the same area where we're finding that resistance. Now, locally, you can see that we're sitting just below the monthly pivot here at 59.77, 59.77. If we can get a daily candle, impulsive breakout and close above that, that should have us heading up here to the R1 pivot at around 61 on that. If we look at this as a 1 and a 2 here, you can see that 60, I said we'd have a target of at least that 61. 5 waves up gets us up here at 61.24. So that's where I'd be looking, and that descending resistance. So you get a 1, 2, 3, 4, 5 up here. And then I would expect a 3-wave pullback and then the breakout. So it's not going to happen like tomorrow, but right now it's looking more likely to break out higher than not. And like I said, once we're kind of breaking out through that, that opens up that potential run up to around 72, at least off there, right? So that's kind of what I'm looking at, just when it comes to Bitcoin, as far as, Bitcoin dominance goes on there. And if it happens, it happens, right? Now you can still, what you'll have a lot, again, remember, Bitcoin dominance doesn't mean alts don't rally. It just means that Bitcoin's rallying harder than the alts, right? That's what it means. Now, the reality of this is, guys, remember back in January of 2024, right before they launched the ETFs, the Bitcoin ETFs. And I told you, I said, listen, I don't think this is going to be the same type of cycle that we've had in the past, especially for alts. I said, we're going to have pockets of alts that rally along the way, but I don't think we're necessarily going to get an alt season. And so far I've been correct on that, right? So 2 years here coming up. Now, does that mean we don't get an alt season at all? No, it doesn't mean we can't get one. But, again, to me, the odds are against it. I think you're going to continue to see pockets of alts run. But if it does happen, that's a great thing, right? I think you just, you want to be, this is something I've argued with so much over years here, being in Bitcoin, right? Is this idea that everybody gets so crazy. Oh, I can't wait till alt season. I can't wait till alt season. And they miss all the opportunities to make money with alts along the way. Now, they've been fortunate to get alt seasons, most cycles. But, again, we get to that point. What if you don't? Are you doing the things that you need to do to be able to make money? And this is one of the great things about what we do at TWC is I focus a lot on helping our students understand that these skills are transferable across all markets. So we do live trading 3 days a week in the mornings, and we trade futures contracts. Why? Because here's the best part about it. You can get in there, you can make cash because it's moving up or down, right? You're going to make money with it. It's a lot cheaper than trading crypto as far as fees and whatnot go. And if you're into Bitcoin for the longer haul, if you think Bitcoin is going to keep going up in value over time, it gives you the money you can to buy Bitcoin, right? If you're losing money with alts because you've held them, unfortunately, and you're down 95% here, it gives you opportunity to make some cash to kind of cancel out that money you're losing on those alts, right? So you're not just have to take the loss and that's it. And so, again, whether you're trading that or whether you're trading, Forex, there's a lot of different ways to make money. Even if you came in just because of crypto, doesn't mean you have to stay there. And just by staying there, you're going to find, that you're probably going to lose a lot more money. But man, when you start bringing in futures and forex and things like that, all of a sudden you have a lot more opportunity to actually make money on a consistent basis. So if you're not already trading those things, I would suggest that you look into it. Now, again, you still it doesn't mean that if you're not paying attention and really trading like you should be in crypto, that all of a sudden you're magically going to make money in some other market. You still have to understand how to trade, right? I'm touching a nerve. Yeah. But that's been my goal since I came in, because remember, I started out with stocks, right? And went on to futures and forex and did all that stuff before I entered crypto in January of 2017. So again, I know, right? But a lot of people who are just coming into crypto don't really understand that part of it. But we got people who are consistently making money. A lot of our students making money day in and day out, with their day trading futures. And then that allows them to then buy more Bitcoin or pay their bills or, do whatever they want to do. If they want to buy a crypto in hopes that it goes up, they can do that, right? It's so important. Let me see here. Bamboo says, I have the theory of half coin season. Many alts will not make new all-time highs. At best, they'll make a retrace to the 61.8 to 78.6 from the last cycle high to the bottom of this cycle. Yeah. Yeah. Definitely. I mean, you got to think, we have what, tens of millions of crypto nonsense out there. I mean, it's stupid how much is out there. A lot of that is going to zero. But here's the other part. Something I was talking about earlier, right? The hyper-financialization of our system means that there's going to be more and more loose money out there looking for a home, which is why you're going to get people spending on it more and more crazy stuff, more and more risky stuff. Think again, from we went from sports betting to prediction markets now. I mean, people are betting on absolutely whatever they can possibly bet on. Is Powell going to rub his nose during the meeting? Is Trump going to say huge in his next speech? I mean, it's whatever it is. It's as stupid as you want it to be. But that is a product of the hyper-financialization that's going on. So what that means is, unfortunately, we're still going to have money flowing into crap, into the shit coins, into the alts. Right? But the more you can understand about that, I think the better positioned you can be. And that's what it's all about, right? It's about making sure that you're better positioned. Let's jump over here to Bitcoin. Whoops, what are we doing here? Let's try again. Okay, there we go. Here's the Bitcoin. Here's the big Bitcoin deal. Forget what everybody else is telling you. Here it is. You see this right here? This is the monthly pivot. You see this here? This is that big descending resistance off that, was that the all-time high? Yeah, it looks like off that all-time high there. Yeah. Coming down, right? This area right here is the key. You'll notice this is a big, large volume node here, and we can actually pull in some more here to kind of get some more information in on that. Give it a minute here to kind of fix up. Okay. This right here is what we need to get at. A lot of people are saying, oh, if it goes up to 117, get rejected, come down. The odds are, if we clear this, my expectation, if this is going to be the bottom here, generally speaking, my expectation is a rally up toward this kind of 120 to 125 area. A pullback right down here to the top of this low volume node. So about 100,000 or so. And then the breakout. Not just a run and a breakout. It would be up to the top here, pull back to that, which, of course, just happens to be the peak over here in early 2025 and December 2024 right there, right? But if we're clearing that, stop thinking if we get to 110, if we get to 117, it's the biggest bull trap, blah, blah, blah. again, the most realistic thing that would happen would be we'd rally up toward the all-time high, pull on back down here toward 100, 105, somewhere in that area, and then take off higher. Structurally, that is what you should expect if we were to get that. What does that mean? Well, that means so many people out there right now are, saying, oh my God, it's the end, right? It's the end of the cycle. Told you it's the end, it's the end, it's the end. It looks like the previous cycle top. This is, they're saying, oh my God, it looks like the one time it happened before. Guys, listen, if you're looking for something to repeat something else and it's only happened once or twice, stop. There's no statistical significance in it only happening once or twice. You're basically guessing. Stop with the nonsense. And see, this is the problem. You guys have these huge accounts out there who sit there and they don't know much more than you. This is the thing. But because they have a big following and they're saying what you think, oh my God, they know what they're talking about. Most of them don't. Their business is not actually trading. Their business is your attention. That's their business. Okay? You guys, you absolutely, if you're following people online, myself included, you have to keep this in mind. You have to remember this. If anybody's showing you something, they're saying, oh, look, this happened the last time. So it looks kind of like it now. So it's going to happen again. It's a crapshoot. It may or may not happen. They get, and y'all give them too much credit when it actually happens, right? Just like people who put the Wyckoff schematics up there, and then they say, oh, look, price action looks like this, so it's going to do this. Well, no. But see, unless you've been doing Wyckoff for any amount of time and you've got experience, okay, well, distribution and accumulation often look pretty damn similar. It's the volume analysis that changes it, right? But if you don't know that, if you're not used to that, and you see them just throwing a schematic up there of just price action and saying, oh, it's going to do this, you think, oh my God, they know what they're talking about. The problem with this, especially if you're new and they're the first, maybe the first person that you see, is you're going to think that they know what they're talking about, which means when they say things in the future, you're likely going to trade according to them. One of the biggest things I try to hopefully help you guys understand is no matter who's out there talking, even me, if I say, listen, I'm looking at this and this target and whatnot, the problem is you don't know what to do with that information, right? You don't know if some price action change is going to happen along the way that's going to make me rethink what I'm saying, or anybody else that's giving you information out there, right? So when you blindly follow any of us out there, you're putting yourself in jeopardy. You cannot make money consistently in the market by following somebody else online. But that's exactly what retail tries to do, right? They try to find somebody that thinks going to tell them what's going to happen. They're going to make money all the time. Here's the thing, even if they're right, most of the time your emotions and your lack of understanding of what's going on in the markets means you're not going to follow through as you need to according to their analysis. You might be late, you might be early because of your emotions. You might not even do it at all, or you might do it and then it's wrong, and then that completely blows your mind as far as what you should be doing in the future when it comes to them. Stop relying on other people out there to tell you what you need to do. You have to absolutely learn how to play the game. I know that isn't what most of you want to hear. I know you want to hear, listen, you should just be able to tell me where to enter and exit, and that's it. Well, no, because even if everything else is fine, even if it's a mechanical system, right? Like Fibbo does, right? He's got a mechanical system that he says, listen, if X plus Y, then Z, right? The problem is if you don't have control of your emotions, if you don't have a basic understanding of markets and what's going on, even when his system says to buy, you're not going to buy. Or when it says to sell, you're not going to sell. Right? It's this idea of you don't know what to do with that information. And here's the problem with social media. Y'all are in an information overload. I've said this so many times before. I don't know how I would be able to start trading today. I started in 95 when we didn't have all this, right? You start today, and all of a sudden, you're looking everywhere on social media, on X. You're trying to find all the accounts that you can and listen to what they're saying. But now you have information overload. These guys say this, these guys say that, these guys say another. And you don't know what you're doing anyway. So you can't even take advantage of what you should take advantage of and ignore what you should ignore. Does that make sense? I mean, this is the reality. And I know it's not what you want to hear, but I've never been here trying to tell you what you want to hear. And that's why I don't have 100,000 plus followers on social media. Because what do most of y'all want? You want somebody to put charts out there, tell you where to buy, where to sell, all that kind of stuff, right? And then you expect to be right 100% of the time. And the one time they're wrong, you're like, oh, you know what you're doing, right? Or they get it wrong, and then you lose a lot of money because you don't understand proper risk management, right? These are the realities. These are what you want versus what you should be focusing on. Very few people get beyond that. Very few people get beyond. Most people just stick with oh, no, somebody just needs to tell me where to buy and sell and do whatever. I don't want to do the homework. I don't want to do the work. The cool thing about doing the work, though, is you can spend a lifetime doing this. I've been doing it for 30 years. Fibbo, I see Fibbo's in the audience here. He's been doing it for getting on 25, 30 years. He actually does it as a full-time job at his day job, as well as what he does for y'all. Because he loves it. He loves the markets. But you can't do that if you don't actually put in the work. Bamboo says, not only do they expect to be 100% right all the time, but they want instant pumps with zero drawdowns. Yeah, that's the biggest thing, right? I remember when I first started, and I would get so stressed out if price came back against me and it went under my stop or under my entry, right? When I first started. I wanted to buy in, and whenever I bought in, it didn't matter. I didn't know anything about structure or anything when I first started. I just knew that whenever I bought it, I just needed it to go up right away. Don't ever come back against me. That was the first stressor, right? The second stressor is, when do I get out? Every time it pulls back, you're like, oh, but what if it goes higher? If I get out and it goes higher, then I'm losing out on that money, right? But when you learn to trade and you learn to start understanding how to enter, and you start understanding structure, and you start understanding liquidity flows on your chart, which is what we focus on at TWC, right? When you start getting that, well, now you're not so fearful. So what if it goes up without you? As a trader, again, I keep telling you guys, there's two rules as a trader to be successful. It's as simple as this. One, learn what proper risk management is and use it every single time you trade. Two, just take profits consistently. Those are the only two things. If you do those two things, you've done everything you possibly can to guarantee your success as a trader. If you do those two things. But what do we focus on? What do you normally focus on as traders? You focus on, oh, I got to get I have to buy the absolute lowest price and I have to sell the absolute highest price, right? Notice nowhere in what I said was that part of it. Because that's ridiculous. That loses you money. That's the thing. But if you can get into a trade and lock in profit consistently, even just a little bit profit consistently, time and compounding do the work. Now, you don't have to focus on buying the absolute lowest price or selling the absolute highest price anymore, which is a fool's errand. We get it a lot of times, with what you learn with me, sure. You're going to get it or close to it a lot. But that's not the goal. The goal is just to get into a decent position where you can make some money and lock in those profits. That's all. That's what you want to do. If you can do that and use proper risk management every single time, you are in the elite 0.5%, 0.1% group out there, because you understand what it takes to be successful as a trader. Instead of adding more and more indicators and trying to learn more and more different things and trying, another issue you guys have, I'm sure, right? Because I went through it, is you kind of half-ass learn something, you half-ass try it, and then it doesn't really work out immediately. And so you say, oh, that doesn't work. And you try to learn something else. You never actually give it full focus, full time in there, right? This is something that is consistent among almost all traders at first. You go through that because, again, you don't look at it realistically. You don't understand that it's going to take time to learn. You want it to happen overnight. You think just because you can get in the market, just because you can do this, that you should be able to be successful right away. Right? Yeah, like Fibbo says, didn't work. Screw it. So these are, these are the things that you're dealing with that is actually costing you money. These and the things you're not doing that are costing you money, right? That's the big issue. That's the secret that nobody wants to admit to themselves. And so they continue repeating those same mistakes over and over again. They continue looking for a new thing, a new thing, a new thing, a new thing to do it. And so, you're looking for perfection. You're looking for, buying the low, the absolute lowest price, selling the absolute highest price. But those things, that perfection, that buying that lowest price, selling that highest price, that's not realistic. And when you can get your mindset off that and get it toward what I was talking about, which is proper risk management every time, understanding that you're going to lose money along the way, understanding that sometimes you're going to hit losing streaks, but proper risk management is what saves you, and just focusing on locking in profit consistently. The more you do that, those two things, the more profit you're going to see your account gain over time. But you're not going to get rich overnight. And as long as you continue to trade like you want to get rich overnight, you're going to lose money overnight. It's the reality, guys. I'm not here to just say it just because. It's funny. I always say stuff like this, right? So I've been doing this 30 years. And I say something like this, and I try and talk about this, and I'll always have some yahoo who will come in and they'll say, oh, you just don't know what you're doing. You cannot do this for 5 years, 10 years, 30 years without figuring out how to do it. You just can't. What are you going to do? Where are you going to find the money to keep throwing in there? You guys have to get beyond what you think you want and understand what's realistic. Because once you do that, that's going to be the biggest mind shift change to help you become a consistently profitable trader that you can make. You have to let go of the preconceived nonsense that you had. Otherwise, you're just going to keep hurting yourself. Okay? Let me see here. So yeah, so Bitcoin, my big picture, guys, is this. You don't have to trade shorter time frames. My big picture is this. Impulsive daily candle breakout above this 94,000 area signals the low is likely in. Again, there's no guarantees. There's never a guarantee in trading, guys, except you're going to lose money from time to time. And the newer you are, the more money you're going to lose and the more often you're going to lose it. Okay, that's the only guarantee. But if we can do that, and especially do that through that descending resistance, odds are much more in your favor that you're going to continue higher. And like I said, when you can clear a close here, especially on the weekly, but even the daily here above this 105 kind of area here, 105 to 107, when you can get an impulsive breakout and close above that, your odds are exponentially increased that the low is in here. And again, the idea is that you're going to get this move up toward this 120, 125 area. Then you're going to get a pullback down to 100, 105. And then you'll get the breakout higher. That's the likelihood of what's happening. Now, Again, I said you have to break out. I'm not telling you it's going to happen. I think right now I'm leaning that way. But until we actually get that breakout there, very, very real possibility. And even once we do, there's still a possibility that we're going to head down lower. But if we don't get that breakout there and we continue to pull back here, the odds increase that we're going to break down below this 80,000 area. And if we do that, we should be looking at this 74 to 76,000 area here. And then potentially even 69,000. But even then, we're still just kind of doing this right here. See if we can draw this out here. This is where I said earlier, where we're basically just sideways since back here in January of last year, or January of this year. We're just sideways here. So again, we could sweep this low here, print a spring, boom, right? But right now, as far as right now goes, this is capitulation right here. Look at the volume on the daily here. Whoops. And look at where the last time volume was this high. Way over here on this pullback here before, rallied up higher there. But that was all the way over there in December of 24. It was a year ago. Along this way, there's been few times where the volume's actually been that high there on the daily, right? I mean, we were at the upper ends of these spikes here. So again, could go down lower. Not saying it can't, but if you're getting that impulsive daily candle breakout and close above that 94,000 area, you should start leaning toward at least to move up here to 100,000, 105. And if you're there, really good chance you're going to run up to 120, 125. So that's what we're looking at. Okay. As far as Ethereum goes, I mean, if I'm looking at Ethereum, my thought as I'm looking at this is we've got 1, 2, 3, 4, 5 up, and then W, X, Y on the pullback here. So that pullback of that rally off this April 7th low, the pullback is about 65%. If we look at the pullback off this entire rally here, the pullback is almost 61.8. It's right here at this high volume node. And so what I'm looking at as far as Ethereum goes, this looks like it may be 1, 2, 3, 4, 5 leading diagonal, potentially a 1 and a 2 here before we head out higher. The first all-time high over here, November of 21, followed by this recent high up here in August of 25. This is a lot of sideways. This is a hell of a range here, guys. That's a lot of sideways on that. We'll see what happens. Right now, we do have hidden bullish divergence on the daily RSI here. So we got lower lows with the RSI, with the oscillator there. And we got higher lows here with price. Hidden bullish divergence. The daily stochastic RSI is nearing a breakout of oversold. RSI is right here on the bearish side of neutral, but looking for it to kind of climb above there and bullishly cross over the SMA. But I'm really interested in potential bottom being in here. Now, if it's not and we break down lower, we'll look down here at around, 2,000 as the kind of the next downside target, 2,000 to like 2,300 area there. But if we can get this breakout here and head up, all of a sudden things start really looking interesting. This is the weekly, by the way. I'm sorry. I think I was saying this was the daily, but this is the weekly reset there, right? Daily looks like 1, 2, 3, 4, 5. So again, looks like a leading diagonal here. The pullback is right there around 50%. It could pull back a bit further. It's fine. But what I'm looking for right now is a breakout above this here. This is 3 waves back, A, B, C here. So I'm looking for a breakout above that second wave at 32.66. If we can get that, it's going to suggest we head up higher. From where we're currently sitting, that would give us 5 waves up around 4,700, right up around the swing high. Same thing I was talking about with Bitcoin, right? Rally up to the all-time high, then you get your pullback, which would be right into this triangle here. So you'd get a 1, a 2, and then a 3 on your breakout. So, again, and you should expect Bitcoin here or Ethereum here to kind of run with the way Bitcoin's running because the way in which it's following it, right, or moving with it. But again, Ethereum is breaking out against a Bitcoin. If you look at the Ethereum BTC chart, let me go pull that up here real quick. I forgot to pull that one out. Let's see. Look at that breakout. Now, I was back here, whatever this was here. So I guess back over here, October. And I drew this down here with the rally up, and it came a little bit lower here, but pretty much came where we're looking and a rally back up there. We've got the breakout here on the daily of this descending resistance. Can retest, rally back up, pull back here. I mean, overall liking it. Right now, as long as 0.033 holds, I'm looking higher. So that's kind of where I'm at with that at the moment. But, again, Ethereum really kind of doing its move here against Bitcoin, which is why we saw some alts doing decently too as well, right? We can zoom out a little bit more. Look at the weekly here. Look at that. 1, 2, 3, 4, 5. That pullback. Yeah, let me turn this off here. That pullback is right there at 50%. So it looks like we've got A, B, C here down to the low. Big wick there, kind of pull back into it, trying to push out. So I'm looking for a breakout above this 0.03809 to indicate that we're probably going to break out higher here and head up higher. Let me see here. Let's talk about gold and silver because damn, right? Here's gold. Gold is in this very large range here. We are above the monthly pivot at 41.5120. Based on the height of this pullback, which by the way looks like 3 waves there, so we should break out higher. So the pattern target based on the height of that is still what I talked about previously at 4,700 area. So that's where I'm looking for, for it ultimately to head up there. Now, right now, we could see a pullback from here. We're getting a good rejection on volume on the daily here at the R1 pivot. I wouldn't be surprised to see us pull back to the pivot at about 41.50. But if we do, I want to see that area hold. And if we can and rally back up, again, 4,700, I think minimally is where we should be looking for gold. Silver. Silver doing even better here. Look at silver. Silver hitting a high today of 65.05 and then getting jacked, getting dumped there. Now, we had the range here, and it just broke out of its range quicker than what gold did, right? Now, obviously, again, these ranges, they're just starting points as far as targets go, right? So this one had a target of 58.8, which was what? It was this sideways here. And then it broke out again higher. Now, right now, I'm looking at this. If we continue to break down the beginning of next week, because that's a lot of volume coming up there at the swing high and a low and a close, lower close here. So if next week, if we can continue to push down lower, I'm looking at 58.11 and maybe even 58.89.5. Those would be my targets to the downside, and then looking for some rally up higher. If we just bounce off that 58, 115 kind of area, 69, 58 and a half, basically $70 is your target. If you do get a deeper pullback to the 50% there in this daily fair value gap, that would have you looking up around $71 as your target for silver. So it just becomes now, how does today end, and does it continue to pull back in the beginning of next week? If so, we'll look on what you should do is when it gets to these target areas, you should zoom into like the 1 hour and start looking for potential reversal happening there. And hopefully you've got the skills to understand structure and setups and whatnot, but that's what this is what I teach. You start with your higher time frames and you zoom into the lower time frames when you get to those higher time frame points of interest. And you look for a setup suggesting a potential reversal or at least a bounce at that target area. You don't just blindly put a buy in here or blindly put a buy in here, because if you're wrong and it continues going lower, guess what? You're likely not going to get out. You're going to continue to ride it lower and you become an investor, whether you like it or not, right? That's how so many of you, let's admit it, a lot of y'all are sitting in that with alts right now, aren't you? So, yeah. So, I mean, as we continue to look at this, with the Fed coming out and saying, listen, here's our rate cut again, and we're going to start buying treasuries. It looks pretty good for liquidity for next year. But again, the one caveat of that is, can they get more than one cut next year? If you can get multiple cuts, if you can get like 3 cuts next year, man, that would really be, steroids for it, right? With the still buying the treasuries as well. If you're just stuck at one, be a bit more cautious about that liquidity story. Okay. Alvin says potential trap and trend 4 hour on Brett, if anyone is keen on that. Yeah, trap and trend is something else I teach. Just a quick mechanical system that kind of takes a lot of the stuff of what we teach into one easy to understand and easy to use trading system. Okay. So that's kind of where we're at here. Again, if we look at, let me do this real quick here. Let's pull up. Let's see what we got for the S&P here. Not the futures, just the regular. Well, we can look at SPY. Here's SPY. Pull us out here to the daily. I mean, look at this. Look at yesterday's little pump up here. We had this pull back and rally up, and then pull back and rally up. And here we pull back and bouncing back up. Demand just keeps showing up. Why? Low volume node right there, right? So there's not a lot of interest to continue pushing it down. But if you look here, that all-time high, we're just below it. Yesterday, we got up to 689 and a quarter. 689.7 is the all-time high. We're above the monthly pivot. As long as we're above the monthly pivot, we should be thinking about higher. But this is what we have there, right? Now, could I see a pullback to the pivot? Sure. We almost rallied up to the R1. We're out there all the time. I could definitely see a pullback potentially to that. But it doesn't have to. But if it does pull back, I'd be looking at 673. If we're going to break out higher, well, heck, all of a sudden, looking a lot more just from where we're at right here. 5 waves up gets us to 754. So, I mean, I guess you could, even if you wanted to, draw a range this way. I know some people are kind of keen on doing this because you've got these up here, but that right? Just got that range right there. Now you do have a lot of volume on these previous 2-day candles here. Spike of volume up there. Both of them closing at the top. We got a pull back here, trying to pull back. So we want to see that breakout. We want to see these hold this support here, which they are so far, and see that breakout. And that'll send us up into blue sky territory there. But, again, if we're looking out, look at the Russell. We've talked about this before, right? We'll just look at RUT here. Look at this. Look at that. Look at that new all-time high up here. The all-time high was back here on the weekly, on the week of October 13th of this year at 225.41. And then here we are breaking out this week, getting up to 25.95. Now, the importance of the small caps, right? The Russell here is that they're the best barometer of how the economy is doing. You're going to have a lot of people saying the economy sucks, the economy this and that. Watch the Russell, because these are smaller companies, right? And they're much more affected by interest rates and what's going on locally in the U.S. as far as the economy goes. So when you see them breaking out to new all-time highs, that's an indication that, hey, they're not too worried about it. That they want risk on, risk off. Risk on. Jeez, oh whiz. Right? But here we are, man, just breaking out again. So, as long as those keep breaking out, you keep looking for risk markets to continue to head higher. That's what you're doing. I mean, this is an easy way to do it, right? This has a very large range here. This has this. Look at that. Within that, this was here. This is, those of you that have been following me for any length of time, well, I guess for a more decent length of time here, I was talking about the idea that this was likely a spring here, and we were going to head up and, head on up here toward the top of the range. And that was huge, right? That's 1,660 up to 2,440 or whatever. That's a huge move. And then we got the pullback, and everybody's like, oh, you were wrong. We're not really breaking out other than just that little bit there. You're wrong, rejected. Continue to break out higher. Right? It's all about understanding the structure and how to read it. Now, we don't have volume on here, so I can't bring that part up to it. But when you bring the volume in here with this, I mean, hey, it was clear as day that we were likely to head up like that. All right. These are all the things we teach, guys. There's so much more in there. Not just with structure, not just with different trading systems and trading styles and whatnot, but really understanding liquidity. How does liquidity play in this? How do you identify liquidity on there? Right? How do you identify liquidity? How do you trade it properly? How do you, how do you forecast likely price movement out of that liquidity or with liquidity on there, where liquidity may be likely to show up even in blue sky territory? These are all what we teach in there. But, again, the focus really continues to be, even beyond all that, on your psychology and your emotional readiness and what's going on there and helping you understand what you're dealing with and how you're dealing with it. So again, we've got one more discount code there for 50% off our annual liquidity cartography program, members.texaswestcapital.com. The code is 50 off, 50 OFF. One thing across there. I put 3 out yesterday. 2 have been taken. We've only got 1 more. My man here, this is Jonathan. He says, got so far since TWC. Jonathan's great because Jonathan came in and he was in the red on his account. And 6 months into being with us, he sent me a message and he said, man, I'm so happy with what we're doing here because he's like, I'm finally back in the green. I'm finally in the green. And he has just been doing gangbusters in there. Alvin's another one here. Alvin came in, put his head down, got really serious about it. And decided, and Alvin doesn't live in the US. Alvin lives the other side of the world on another continent. But he figures out how to make the trainings when he can. He figures out how to make the live trading when he can. And just absolutely just blown away by his success over the last 2 years with what he's learned over here with us as well. And so, at the end of the day, guys, just having access to information is not going to make you successful as a trader. You've actually got to do the work. See, there's Alvin right there. Yes, join. You won't regret it. You have to actually do the work, right? And this is the hardest thing for me to get people to understand because realistically, most people don't want to do the work. But man, this little bit of effort you put in, this little bit of time you put in now pays off so much significantly, has the chance to pay off so much significantly in the future. You can really do something for yourself. I can't guarantee you're going to be successful. I know what I teach works. We've got so many people that are doing it, right? I just named a few of them here, but we've got so many people that are doing it, right? So it does work. But the question is, are you going to do the things you need to do to make it work for you? A lot of people get scared. They're like, oh, I don't want to join because what if it doesn't work? Well, the only way it's not going to work is if you're not putting in that effort. If you're trying to take shortcuts, if you're not paying attention, if you're not showing up to the training, if you're not going through the courses, if you're not asking questions. And by the way, guys, I'm all about questions. I know a lot of people out there, they're like, hey, come join my thing. And then they act like you're putting them out of their way if you have a question, right? No, I expect you to have questions. If you don't have questions, my concern is you're really not learning. Because there's a lot of stuff that is going to be new to you in the way you think and the way you understand stuff. You need to ask questions because if you don't, and you're trying to get further without understanding those issues, those challenges you're having, you're not going to be able to really get beyond it. You got to ask questions. So no matter if you join Texas West Capital or somewhere else, guys, listen, you have to take charge of it. Treat your trading like a business. Treat it like a business. If you were in a business, are you going to sit there and continue to just lose money? Are you going to go, okay, I need to figure out what I'm not understanding about this so that I can make money with my business? Trading is a business. You should treat it like it. But most people get in here and they're just trying to throw money into it, right? It's just like YOLO. Ask me, ask Fibbo, ask Peter Brandt. Ask Bollinger. You're not going to get anywhere in life if you're not figuring out what's holding you back in whatever it is that you're trying to do. And the best way to do that with anything is to treat it like a business, because that forces you to look and go, well, if this is a business, I sure as hell wouldn't just be sitting here losing money and not worrying about it, right? You absolutely have to. You have to do it. Anyway, so that'll be it, guys. We would love to have you there. And by the way, I have an automatic message that goes out when everybody joins, letting you know how to get started with it. Man, reply to it. Tell me a little bit about yourself. Let me know where you're from, what you're doing, what your goals are. I may be able to set you up with a different run through depending on what your goals are. Maybe approach our education a different way. We've got a course vault that's got hundreds of hours of educational stuff in it. We do 3 live streams every week that are an hour to an hour and a half long. where we, use like Elliott wave or Wyckoff or price action to look at the charts and figure out what chart may be showing us something that we can get into, asking questions, answering questions. We do 3 times a week, usually for a few hours. In the mornings, we do live trading. And I'm live trading. I'm trading with real money, guys. But also with that, it's also focused on prop trading as well, because a lot of y'all are like, well, I don't have $50,000. I don't have $100,000 to really start trading. And I feel like I'm not going to do enough if I'm only making a little bit every trade. Well, we tell you how to work with prop accounts. I've gone through multiple past, I don't even know, I have like 15 accounts already, 15 prop firm challenges, past them, right? And I show you how to use the stuff we're learning to be successful with it, and how you have to specifically trade a prop firm account versus how you might normally trade your own account, because the rules are so stringent and whatnot that's going on there. But we've got something for everybody. If you're just a swing trader, that's great. We work with that as well, right? My goal is not to get you locked into something and say, this is how you have to do it. My goal is to say, listen, here are the big structural things that you need to focus on when it comes to emotion, when it comes to psychology, when it comes to liquidity on the charts. From that, here are some specific ways you can trade it. Oh, and here's, proper risk management as well. But we do enough there where you can learn to trade the 1-minute time charts, which is what we do 3 days a week. You can swing trade, or you can look to invest. Everything we teach works across all of those. And if there's something you need to do a little bit differently for one versus the other, I discuss that so you know. But I'm not in a, oh, this is the only thing. By the way, and if you join, you get access to Fibbo and his stuff too. You get access to Vince and Andrew's trades as well. So you always have information. Plus, we've got a great community. For those that decide to actually step up and talk and chat, you're going to meet some great people like Bernardo, like Jonathan, like Alvin, like Sats. Like, there's so many people that are really just Joe, Florian. Gosh, so many people. Like when you try to think of names, all of a sudden it all like jumbles up in your head, right? But we really do. We've got a great core group of traders that do it. And a lot of our people have been with us for years. And I don't know, at the end of the day, if somebody's been with you for years and they're continuing to pay to be with you for years, I think that's the biggest testament to what you do that actually works. Because otherwise, why would they remain? Why would they remain? There's Deadly. What's up, man? Texas West is great. Highly recommend them. Fun group. Lots of education available. A lot of these guys like Deadly, like Andrew, they followed me on here. Alvin followed me on here for months and even years before they finally joined. And they stick around. So, yeah. Anyway, okay. That'll be it. I hope you guys have an amazing day. I hope you guys are trading safe out there. Yes, hundreds of hours of video education. Yeah. And we also record every live thing we do, every training session we do 3 times a week. So you always have access to that as well. I leave charts up for at least a month. And that way, you've always got, I'm not trying to, sometimes trades work out, sometimes they don't, but you always know where your stop loss is. You always know where your entry is. You always know where your targets are. I'm not here to just pull out a good one here or a good one there, right? Because my goal, again, is for you to see what it's like to really trade. I don't want you to have misgivings. I don't want you to have misunderstandings of what trading is. Because it's great. It really is. But it's not 100%. You're not going to be 100% correct. Sometimes you're going to get into losing situations, right? Where you've got multiple trades that you're losing on in a row. That happens. Even when you've been doing it for 30 years, it happens. So you get to see it. So you get to understand. You get to see how things adjust in real time. How do we change with that? What do we do differently? How do we focus? How do we get back to winning? So there we go. Okay. Russell, all-time high crypto in the gutter. What? Not sure I understand. Oh, Russell's at an all-time high crypto in the gutter. I don't think, well, I don't know. I guess if you're looking at alts, crypto's in the gutter, but that's a, that's a structural issue just with the alts, a Red Raider fan, not just a Raiders fan. Don't say a Raiders fan. They think I'm rooting on Oakland. But yeah, but yeah, we like to use, the Russell here as a barometer of overall risk tolerance in markets. And, again, breaking out is generally a positive thing. It means, companies that are more, again, that are more likely to benefit or be hurt by the economy are feeling positive about things. So, 2026 is coming up, y'all. And I think there's a lot of possibility out there. But again, like I showed you on Bitcoin, like I showed you on Ethereum, things you've got to get through certain levels to open up new levels, to open up a stronger possibility. But there are no guarantees. Stop listening to people that are trying to guarantee you things. The only thing it's going to do is lose you money. They might get lucky every once in a while and get it correct. And heaven forbid it's your first time seeing them and they get it correct the first time and you follow them just because of that. All right? All right, I'm going to get out of here. As always, remember, the only thing you control is how much you lose. So please keep working on your risk management. We'll be back on Wednesday with Beards and Bitcoin. Let me see here. We'll be back next Friday. Let me see. Is it next Friday? That'll be the 19th. Yeah. We'll be back next Friday. And then the Friday after that, I won't be here because that'll be Christmas break there coming in. So we'll have to look after that. All right. Y'all keep trading safe out there. Come join us at TWC. We'd love to have you there. Members.texaswestcapital.com. If it's still available, we've got one more 50% off for the Liquidity Cartography annual subscription. And that is, again, 50 off. This is the code 50OFF. And, once you're in there, and those, if you are in there and you haven't looked yet, go to the community announcements page. Check out the screenshots I put up there of the Texas West Capital Trader OS system I'm going to be launching here soon. And I'm also going to be launching for everybody that's in the Liquidity Cartography group. I'm going to be launching access to it's not a signal system, but it scans the market every 30 minutes and it lets you know where to look for trades that might be setting up. And so it doesn't guarantee you things pop off, but it looks at things like volume and flows and order book and momentum and all these things. It's a great little algorithm that I've got put together, and it's going to update there in our group for you guys. So, anytime from midnight to 11:59 p.m., 24 hours a day. So those of you that are anywhere else in the world that are with us, you can look there and go, oh, well, what alts do we have that are looking like, or what trades do we have might be setting up here? So anyway, just a couple of things that I'm doing here to kind of add more value for our students and to help them know where to start looking for trades potentially as well. All right. Okay. Anyway, I'm out of here. Y'all trade safe. Have an amazing weekend. And if you join, please say hi. Not just to me, say hi to the group there in one of the chats. Again, we've got a core group of traders that are always yakking at each other. And so they'd love to have you as a part of it. All right. Y'all take care, and I will see you next Wednesday for Beards and Bitcoin.
Trading tip: always manage risk before chasing gains.